Welcome back everybody, and in today's video we're going to be learning about the four main trading fears, fear and greed, and why they hold us back as traders. And this is an important thing to learn because fear and frustration will bring you into a place where you find it very hard to stay focused and operate from an objective mindset. And how well you can operate objectively is going to depend on how well you can control your fears. If you're paralyzed by fear, you're not going to be able to act on new trading opportunities, even if your trading system signals a clear buy or a clear sell. If you're too afraid of losing money and you're too afraid of losing, you're not going to be able to capitalize on new opportunities. And 95% of the errors that you make as a trader are going to stem from your psychology and the four major trading fears. So if we can identify what these fears are early on, you can be aware of them and you can work through them and eliminate them as quickly as possible. So what is fear to begin with? And fear is just an unpleasant emotion that's caused by the belief that someone or something is dangerous or that something is going to happen in the future. So if we break that down, we can see that fear is nothing but a self-made projection of events that you think will happen in the future. There's no guarantee that these things will happen, however. It's our perception of our environment that evokes the physical and chemical response that we call fear. And we can control our perceptions. So therefore, it is possible to control our fears, and it's something we must do to become successful traders. And the fact that fear is subjective means that it's only within our personal thoughts. The things that we think are going to happen, it only comes from us. So let's get started with the very first fear. And this one is the fear of being wrong. And simply put, no one wakes up and says, oh man, it's a great day to just go out there and be wrong about everything. We hate losing trades. That's the thing. People hate to be wrong. So therefore, when you lose a trade, people almost feel like they're stupid when they lose. And they don't get that reaffirmation of that they're trading well. And what this will do, if you're afraid to lose trades, it will cause you to avoid taking trades even when all your confirmations are set up to take the trade. Even if you get a clear entry signal, the fear of being wrong can keep you from taking that trade. So the market moves in probabilities, and eventually it will happen. You're going to lose trades. That's just part of the game. It's like a cost of doing business. There's no way that you could trade with 100% accuracy, because if you could, you would eventually just control the market, and you would eventually just control the world, because you would have a never-ending supply of money. And that's just not how this game works. The market moves in probabilities, so you have to be comfortable with being wrong every now and then. So how do we fight the fear of being wrong? You just have to embrace it. And you have to ask yourself these questions after a loss. Number one, what did I learn from being wrong? Number two, how will I implement this lesson moving forward? So once you identify what you did wrong, you can then start to come up with ways to never do that again. Exactly how much did it cost me to be wrong? So ask yourself, how much did you lose on the trade? Your mistakes are investments. So whatever you lost on a particular trade, just remember that that's an investment. And think about how much money that lesson stands to make you in the future. Then ask yourself, what's the long-term investment that you're making when you have these mistakes, when you have these losses? Because there's a long-term benefit to having losses in your trading career early on, because you get to learn so much about the market. And then ask yourself, if you had been right instead of wrong, would you have learned the same lessons? So if you put yourself in a mindset where you obsess over the lesson that you learned instead of the fact that you were wrong, you start to view losses in a completely different light. You don't look at them as negative. In fact, you start to look at them as something being positive, something that is going to be an investment for you in the future. The second fear is the fear of losing money. And there's really no way around it. Like, you either like stuff, or you like your time, or you like both. And either way, when you lose money, you either lose a little bit of time, or you can't buy as much stuff. So really, the fear of losing money is the fear of losing your security and losing your ability to make a better life for yourself. And really, money and the fear of it comes a lot from our upbringing. I know for me, I heard certain phrases a lot, like, money doesn't grow on trees. Money is the root of all evil. You have to work hard for money. And with all these common attitudes surrounding money, it's easy to see why there's an inherent fear around losing it, because it seems like it's so hard to gain back. But the reality is that, if you lose money in the market, if you're managing your risk properly, you're not going to lose everything that you have. So the fear of losing money is going to cause traders to seek new strategies and jump around. Maybe the fear of money is so strong that people stop trading altogether. And, the tricky part about that is that you have to win some trades in order to get out of your fear of losing. But the fear of losing makes it hard to win. So really, if we can learn this early on, we can get started on the right foot. We won't approach the market with fear, we can approach it with confidence. The third most common fear is the fear of missing out, also known as FOMO. And really, what this is you're afraid that you're going to miss a certain move. You're afraid that you're not going to, so you've analyzed the market, you've analyzed the trade, but the next step is actually waiting to enter the trade. If you're afraid of missing out, odds are you're going to enter positions enter positions either early, or you're going to enter them way too late. And what this causes is that, a trader with FOMO is going to really lament over moves that pass them by. And if you start doing this, if you start taking positions too early or entering them too late, this is going to just put you in bad positions, and the market makers and the market will just keep taking your money over and over again because you'll be in terrible positions. And the way that we teach market structure in the technical analysis lessons, it's going to be almost impossible for you to feel FOMO, or the fear of missing out, because a lot of times the big moves that people feel stressed out about missing, that's really just the first step to our setups. So we're analyzing the big moves that people are reacting to with their emotions, and we trade off of that. So we'll explain all that later, but a sound strategy is designed to trade an edge, meaning that over time, you're gonna make more money than you lose. And like I've said before, no strategy ever will or ever could predict every single big move in the market. It's just not possible. In our strategy, the moment, like I said, when most people get FOMO is when we start looking at a trade to capitalize on it. So if you catch yourself trying to figure out how to get in every single move, take a step back and use that time to work on your headspace. Figure out why you're trying to find every single move. A lot of times it's because we're trying to accelerate our trading career as fast as we can, and that's a perfectly valid reason. But we also have to understand that it's going to take a little bit of time as well. And it's okay to miss a move. Even if you miss the entire move and you're not able to get on like a week-long trend or something like that, that's fine. The market will always be there. The last thing you want to do is enter a position when your strategy doesn't call for it, or if it's just bad timing. And the fourth most common trading fear is leaving money on the table. So this is a phenomenon where you can actually win trades, but you're unhappy with those wins. Because let's say you enter a trade and you close it out, but the trade keeps going in the direction that you had initially been in, but you already exited out, so you're not getting any of that profit. What a lot of people do is they feel like they failed to maximize their profits. And what happens a lot is this leads to over trading. So you'll be hopping into a trade and then getting out. And then when price starts to go even more, you might get back into that trade. But by the time you've gotten back in, the move is probably close to being over, and you're subject to being caught in a reversal. So there's really no exact method or like signal or indicator that can get you those perfect trades, that can get you out exactly as price is moving in the opposite direction. So most likely, if you suffer from leaving money on the table, if that's a big fear of yours, you're probably a perfectionist in other areas of life as well. And that's completely understandable. And this is how you fix that. If you're afraid to lose money, if you're afraid to leave money on the table, what we need to do is come to a place of gratitude. And it's just that simple. Just be grateful for the market and the opportunity that it presents you every single day. Because even in losses, the market allows you the opportunity to grow. And we just talked about this. You examine your losses and you learn from them. And then the losses don't seem like such a big deal. You might actually say, okay, I needed that loss because I needed to practice this, this, and this. This is why I lost. Let's make a plan not to do it again. So when you close a trade in profit or in loss, be neither elated about it or depressed about it. Just be grateful. Grateful that the market either taught you a lesson or made you a little bit of money so that you can achieve your goals. So come to the market with gratitude and balance, because the degree of elation you feel is going to be the same as the degree of pain that you feel. So if you're overly elated at getting profits, then you're also going to be overly feel an exaggerated amount of pain when you lose as well. So come to the market every single day with gratitude, and this will really help to not feel these fears. So to conclude, erratic emotional swings will dramatically affect the way you trade, which will affect your account balance in the long run. And trading can be so clear at times, yet if you're in an extreme emotional state, you're going to be capable of doing things that you would never do under logical circumstances. So we take the approach of trading like a machine. We want to trade robotically with no emotion involved. And that is so that we can gain an objective view of the market rather than a subjective view. We want to look at it with our eyes. We need to see it clearly and not fight the market within our heads. So we're going to learn these things early on, and you're going to make a wonderful, wonderful trader. Just keep these 4 trading fears in mind, and remember, just learn from everything that happens to you. There's no reason to be afraid of the market because you're always gaining an opportunity. The opportunity to learn or the opportunity to grow your account.